is actually much scarier when you kind of understand how little control you have over it. Being able to get these deals cash flowing, ideally within the first 6 months to a year, is really important. The investors get 94% of the proceeds, so the actual GP or operator is getting 4% until all investors make their initial capital back.
Are you placing capital right now? What's your strategy right now?
Yeah, no, we're continuing to.
Investors and operators, welcome back to the Invest Clearly podcast. I'm your host and CEO of Invest Clearly, Pat Zingarella. In this episode, we hear from Kathleen, a part-time passive investor with a portfolio spanning across 25 syndication deals. Kathleen shares how she assesses sponsor credibility, what she looks for in communication cadence, and the red flags that make her walk away. We also explore how her due diligence has evolved from checking references to watching how sponsors handle underperformance. Let's get into it. The views expressed in this podcast are those of the individual guests and do not reflect the opinions or recommendations of Invest Clearly. This podcast is for informational purposes only and should not be considered investment advice. The appearance of a sponsor or investor on this show does not constitute an endorsement or a warning. Invest Clearly is an objective and neutral platform. Always do your own due diligence before making any investment decisions. Kathleen, thank you very much for joining me today. You've been an awesome contributor to Invest Clearly, so I really, really appreciate that, and I appreciate you coming on, sharing your story. Before we get started, do you want to take maybe 30 seconds, tell us a little bit about yourself, your background? Do you invest full time? Do you have a W-2 as well? And then we'll hop into it.
Yeah, absolutely. So Kathleen Marcell, I married to my husband, Jared. We have 2 young kids, and we both work W-2 jobs, both in the tech space. And I have always been kind of the traditional investor, was always in 401ks, the stock market, and about 3 years ago, kind of learned about this other world of alternative investments and did a ton of research and really opened my eyes to kind of what's possible and what's out there. So my husband and I kind of turned it the other way, of stopped investing in the 401ks and really started doing a lot of work in all things alternative investments, and still feel like I'm early on, just a few years in, but have learned a great deal, and am really excited to kind of be on this path to eventually be in a place where we just have more work freedom and really can choose how we're spending our days and our time, and not being completely locked into having to do the W-2 full-time work.
That's awesome. And I remember when we first met, your journey started, you had mentioned, and keep me honest here, your first investment, there wasn't a lot of due diligence around it. Was that accurate? You kind of went into it like pretty hot. And then I would love to know, from that experience, how has that evolved to how you're looking at things now?
Yes. Yes, things have certainly changed since the early days. So I feel like once I did enough research and I was like, okay, this makes sense, I started talking to GPs and just started to kind of understand what was out there. So would do, a couple calls a week, just understanding. But deal flow was pretty minimal. It was really hard for me to even find deals. And so because of that, I feel like I was kind of settling of like, this looks interesting. And I would try to do a Google search and I'm like, okay, great, let's try it, which now I have a much lengthier process and things that I'll go through. I think part of it was just wanting to do that first investment. I was like, I think once I get one under my belt, I'll feel more confident. But every one that we've done, I think, has taught me something else, to really figure out, okay, what makes sense for us and for our goals. And now that I have, way more deal flow, deals coming in every day to my inbox, and I have different places I can look at, networks that I can go to, it makes it much easier to make a strong decision, where before they were kind of few and far between. So we would kind of pick based on the best of what we had access to.
Sure. We recently had Layla Kunamoto on, who's a professional LP. She does this full time. And one of the biggest things she said for people to focus on early on is deal flow. How have you built that up? Like, where are your deals coming from now?
Yeah, I mean, a lot of it was just like having conversations over time. So I listen to a lot of podcasts and I'll hear about, an investment firm, a GP that I would want to work with, reach out, I set up time, and then you can get on lists. So I'm on a ton of different lists right now. And then it's, using sites like yours, like going on to Invest Clearly of, okay, what are the ones that have a lot of good reviews? And I'm doing my own research and reaching out, setting up time to talk with those folks, in a few other kind of networking types of groups. So that kind of gets names on my radar, and then
Sure.
I'll do research. Okay, what types of deals do they do? How long have they been in business? What's their track record? Okay, is this one I want to actually learn more about? And then I'll set up time to talk with them.
Sure, very cool. And you mentioned like goals and future looking, I guess, lifestyle, right? How are you evaluating, like what is your strategy when it comes to aligning to those goals? Are there certain asset classes you're looking at? Are there only certain returns you're looking at? Are there only certain geographies? Like what is your buy box, I guess, or strategy currently?
Yeah, and that's definitely changed quite a bit. So early on, we were both in W-2 jobs. I'm like, we don't need the cash flow now. I'm going to do more equity deals. So that's what we did, kind of all of the deals early on. I feel like over the past few years, there's been a lot of changes in the economy. We both work in the tech space. And just from more of a security perspective, we've kind of changed that. So being able to get these deals cash flowing, ideally within the first 6 months to a year is really important now. So having some sort of have cash flow coming in, that's a really important piece. And then I'm looking at the time frame. So I prefer like shorter term, which I would say is like 3 to 5 years. I don't want something that's going to be, locked up 7 to 10 years.
Sure.
Um, the track record of the investor is a big one. So making sure that they've been doing this and, have strong metrics for the past 10 plus years.
Yeah. Okay, cool.
Um, and then distribution is, something of like, okay, what can we expect from a cash flow perspective? So just having a number that we're comfortable with as we're kind of transitioning to more cash flow with equity as opposed to just the pure equity deals that we started with.
Sure. Makes a ton of sense. You mentioned track record. Track record seems to be a very hot topic right now in terms of validation, simply because of maybe the environment we're coming out of or even like in the middle of. Are there any specific things you ask to validate track record beyond just like, hey, how have you done over the past few years?
Yeah, so I try to look at like or have them talk me through a specific fund. Maybe we're talking about fund four. Like, all right, where are you at on fund two? How is that, performing compared to what your performa was? I will also always have GPs send me, okay, for fund two, can you send me the latest update that you sent out to your investors? For the most part, they're like ready and willing and can do that in a click of a button. Others that are like hesitant to do that or, don't follow through on that, that's like a big red flag for me of like, I want to see how you're communicating, what those updates look like. Because that's been a big piece. And again, we've been at this for about 3 years. Some are great with communication and just make you feel like you're in the loop every step of the way.
Yeah.
Other ones, I'm like, I haven't heard from you in 6 months. Like,
Yeah.
what is going on? So being able to just see how they respond to that request, I think can give you a lot of clarity into kind of past deals. And then, they should have metrics, whether it's on their site or in their deck of like actual performance over time. Talk to me about a deal that went full cycle. Like if they haven't seen that yet, it's probably not the investor that I'm kind of looking to work with.
For sure. That's such great feedback on the having the communication sent to you, because that is the number one thing LPs are focusing on right now, but it's so difficult to validate. Like, how do you validate like effective communication 3 deals ago or something like that beyond, hey, show me consistent communication that has gone out. So I could see, and it's I would say even the communication side of things, people aren't concerned about negative communication. It's just like, how are they communicating? Like you said, like it's been 6 months. I want to know what's going on here. So that's great feedback. In terms of, are you still? You mentioned some forward facing goals of like moving towards that investment process to get out of the W-2. Are you placing capital right now, or are you on like a wait and see strategy? Like, what's your strategy right now?
Yeah, no, we're continuing to deploy capital as we get it, even kind of with everything that's going on in the world. I'd say we've shifted a little bit away from like full real estate. So we did a lot in multifamily early on, put a bit of a pause there, kind of with everything going on. But we've been doing more in the oil and gas. Some
That's
really
great.
interesting kind of tax benefits for us both being W-2. Just recently invested in a medical office fund. So another kind of piece that just as you're kind of learning about stability and the economy, like those have been doing really well. Um, so just continuing to kind of understand what's out there. But yeah, continuing. I mean, I know the economy is there's a lot going on in today's climate, but I think that's just part of it. And we have to kind of navigate through it. And I guess another piece I'll say in my kind of buy box or my like thesis is I don't spend like a ton with one investor, especially kind of being early on. And every time I talk to someone, I'm like, hey, new relationship, are you willing to kind of cut that in half? So instead
Cool.
of putting 100, can I do 50? And for the most part, I've gotten a really good response to that. So that has allowed us to participate in many more deals than I think we would have been able to otherwise. And makes me a bit more comfortable that, you're not deploying as much capital,
Yeah.
like prove out this works and like, I'll gladly work with you more in the future. So, yeah, we've been continuing to invest, but kind of using that mentality.
Yeah, that's great. It, why has someone said no to that? And is that like besides a personal risk factor of, hey, I want to test you out, is that a red flag if someone doesn't lower their minimum? Is that like a weird thing where, hey, this is the first time we're doing something. I'm testing out a relationship with you. Why wouldn't you lower this and then earn my trust for forward-looking investment?
Yeah, I feel like for the most part, I've gotten like, yeah, and we've been able to do it. I think a few people have been like, that's like not what we do. If it's
Yeah.
like really important to you, we will. So yeah, I think it just kind of depends on their particular circumstances and feedback that I got from one investor of like sometimes when people are putting in less capital, they're kind of the more needy investors of like
Yeah.
wanting all the updates and all the things. And I'm like, I assure you that will not be me, like full trust, but we just need to, we're still new at this. I feel like
Yeah.
I'm still learning and, I want to be careful. I want to make sure that this works. So this kind of gives me more of a comfort level to get in there and still understand what I'm doing. I'm still doing the due diligence, but not putting everything in one basket.
Yeah, that's great. So you mentioned kind of shifting from what I would say mainstream real estate to these alternatives that are more like operations plus real estate, the oil and gas. I guess medical office is still pretty core. But you're like the fifth or sixth person on this podcast that has brought up oil and gas lately, and it's a wild trend. It's not something like we're starting to see it on Invest Clearly. There's more sponsors getting involved in the oil and gas space, but I mean, I've never seen someone like the consistency of people bringing it up the way they are lately. So that leads to my question about due diligence as you shift into these new asset classes, maybe for the first time that are a little different than mainstream real estate, how does your underwriting change? Are you focused more on the jockey? Are you focused more on the operations? You mentioned tax benefits for O&G. Is that the primary driver for what you are going for there? Like, what does that look like as you're making those shifts?
Yeah, I mean, I think the tax piece kind of got me interested of like, okay, I should learn more. So started listening to a lot of podcasts in that realm and started talking to a lot of operators just to kind of learn what that looks like. And I think early on I was so like scared of it because you hear about these oil and gas investments where they go to drill and then nothing's there and you like completely lose your investment. So for me, I'm like, oh,
Jeez.
nope, scary.
Yeah.
But then you're like, okay, why are people doing this? Like, I need to look into this further. And then you understand the different tiers that are involved. So a fund that I'm looking into currently, they only operate in like tier one. And so you're working with the large kind of gas producers of the world, all the kind of big brands that we would think about. So there's lower risk when you're operating within that tier. And so just being able to understand kind of what you're setting yourself up for, what that looks like, and just understanding really what the real risk is. Because no, I'm not going to do one of those that you could potentially lose all of it.
Yeah.
Sure, the upside could be great, but that's super risky. Where learning about kind of the tier one and this investor that we're talking about now, the investors get 94% of the proceeds. So the actual GP or the kind of operator is getting 4% until all investors make their initial capital back. And so that's another huge piece of understanding how these operators are making their money. Because if they're only making 4%, they are extremely motivated to get everyone their money back. And then that turns into a new distribution. I think it goes down to 75-25, something like that, which that's when they make their money. So they are motivated to get us our money quickly and make that work. And so I love deals that are set up in that way. So understanding how are you making your money? What are the risks? And that can kind of shed a lot of light on if it's a good deal or not.
That's very interesting. This episode of the Invest Clearly podcast is brought to you by Scale IR. If you're raising capital, you know the hardest part isn't just generating leads, it's turning those leads into committed investors. That's where Scale IR comes in. Scale IR transforms your investor engagement process with their proven solutions that optimize lead qualification, accelerate investor conversations, and drive higher conversions. From seamless CRM integration and intelligent workflows to expert investor qualification specialists who handle your initial discovery calls, Scale IR gives your team freedom to focus on closing deals. If you're ready to scale your investor relations and capital raising effectiveness, visit scaleir.com to learn more and book your strategy call today. Scale IR. Engage smarter, convert faster. You mentioned quite a bit about the research you do before going into a deal. You know, you're listening to podcasts, you've got your deal flow. How much research, what does that process look like for you? Like, when do you, I guess, feel ready to invest in one of these deals? How many are you looking at? How much research are you doing? Walk us through that strategy.
Yeah. So first, I would say I'm doing enough research to really understand kind of what the opportunity is and how it works. So all of these I'm investing with my husband, but I would say I'm the one that's kind of doing all of the research. I like love learning about all this. So my point is, can I go to him and explain this and how it works and how we're going to make money? So that's been really helpful of like, okay, I understand oil and gas enough. I'm like, hey, can I run this by you tonight? And I'm explaining and answering all his questions. So being able to kind of confidently explain what that looks like. Um, the other advice that I kind of got along the way was like after a call with a GP, like respond to them in your own words of like what you think you learned and
Interesting.
have them validate, like,
Yeah.
did I actually understand it? Because it's been interesting. Like I feel like some of these people in oil and gas have really educated me along the way. I'm like, okay, this sounds great. Let me go talk to 3, 4, 5 others and then kind of just see who do I feel like I can work with, who has really been open when I've asked for a past report and email and they can send it in 1 second and it meets my criteria. It's from, a few weeks ago that they sent out. So that goes a long way. So I'd say part of it is just kind of comfort level. But it's also me like being able, okay, I confidently understand what this is, what the risks are, what all of this looks like. And then I'm like, okay, I can stand behind, putting our dollars here and I can explain it all to, my husband, my investing partner. And he's like, okay, this makes sense. So I don't think it's a set number, but I'm never just talking to 1 or 2 people.
Yeah.
Definitely a handful.
That's really, really cool. I mean, very basic, right? That's what they say is, do you know it well enough to explain it to someone else? If you don't know it well enough. So that's fantastic. So we talked a little bit about this, but obviously Invest Clearly is really based on trust. You touched on really them sending the communication, maybe trust being around them validating what you learned and like, walking you through the educational piece along the way. Besides just the deal due diligence and understanding that, what I guess what gets you to trust a GP, or what, like when you're evaluating the actual jockey, what does that trust process look like? And is there a red flag where it's like, okay, I actually, besides track record you talked about as well, it's like I actually, I thought this might have been the right person. It's not based on this 1 or 2 things. What does that look like for you?
Yeah, I mean, I think like an initial signal is just that they're willing to jump on the phone and give you time. And I'll explain, hey, I'm a newer investor. This is new to me. And the people that are really willing to kind of take the time and explain how they think about things and answer my hundreds of questions,
Yeah.
that certainly goes a long way. Um, but yeah, it is finding information out there. So like I will always go on Invest Clearly
Yeah.
and take a look at what are other people saying. Like I throw their name in Google as many different times or ways as I can. And
Yeah.
like I try to get in there and find out any information. I'll listen to them on podcasts. So I think you just have to, kind of connect with them in terms of what they're trying to do, understand how they got into the business, how they make money. Like if we can all align on that, and then, what is the deal? What does that look like? We talked about, distributions and all of that. So is it, a percentage that I think is fair and makes sense, because they all look very different.
Yeah.
But if I can understand how it can benefit me and them, and I feel like there's someone I want to work with and I will be okay working with in 5 years because these aren't short-term things, that all goes a long way.
Yeah, fantastic. And Kathleen, I should have asked you this earlier in the episode, but what is your portfolio makeup currently? How many deals are you in, and then how is it performing right now?
Yeah, so we're probably in, I'd say about 15
Oh wow.
deals. Um, Really kind of spread across, I'd say, well, maybe half of that is in multifamily. That's kind of what we did a lot of early on. But we have some self-storage in there, the medical office. I
Yeah.
have mobile home, fund. Um, so it's a little bit of everything. We've done some kind of new builds, so some development projects, more in the kind of multifamily space. So certainly a number of different things. Private credit is kind of something newer that we've invested in this
Hmm.
year. Um, so certainly a diversified portfolio. And in terms of how it's performing, we just had our first deal this year that went full cycle, which was exciting to kind of finally see that. And it was great, even better than kind of we were expecting. So that was exciting to have the first one under our
Yeah.
belt. And then really it's only been over the past 6 months that I've kind of redefined our investment thesis and have focused more on the cash flow. So we're just starting to see that. And then some of these early deals that we invested in 3 years ago, a lot of those are kind of at the final stages now. And so then we're taking those and reinvesting them into cash flow deals, to focus a bit more on that. And then I think we'll be able to kind of see it in real time, if you will.
Yeah.
It's been a bit of a waiting game with some of the early investments. But for the most part, everything's been going well. The development projects, certainly more delays there than I would have expected. I think I learned a lot, that those are very much subject to change. So
Yeah.
a lot of those have kind of been pushed back a bit, but still look promising.
Yeah, great. And are you seeing, now that you have shifted your investment thesis to more cash flow base, are you seeing many cash flowing deals in today's environment?
Yeah, I mean, I think, there are. So in terms of just kind of depending on funds, private credit is another really interesting one to look into. I feel like those have, like, popped up.
Yeah.
Like you said, the oil and gas, I feel like, private credit is another kind of piece that is everywhere right now. I think just in this, economic climate, people are feeling more comfortable with that. Um, but yeah, I think sometimes it may be a little harder to find, but they're certainly out there.
Yeah, that's great. Yeah, I'm hearing a lot about private credit. I'm hearing a lot about oil and gas, and more recently, I've been hearing a lot about senior living. Have you looked into any of those?
Yeah, we have 2 of those in our
Okay.
portfolio, which are both working well. One is, really interesting though with the labor shortage, which is again, something I would not have thought of, but they're doing really well, but they're having a lot of turnover and having a hard time retaining nurses and things in this, community up in Wisconsin. So
Yeah.
again, it's just one of those things where you're like, "Oh, I would have," you don't think about that. So you kind of initially say this elderly population, people are definitely moving into
Wait
those.
list and yeah,
And then you
yeah,
don't think about, okay, the staff and, the nurses there. So, but this sponsor has been great and they're very communicative with how they're working through that and what that looks like. So even though it's been challenging for them in that regard, I feel like we're in the loop and it's still been really consistent from a distribution perspective.
Sure, that's great. Yeah, and it's funny those external, I guess maybe macro-based environment things that people don't take into consideration that has huge impacts. We had someone on recently, his name's Jeremy, and he was talking heavily based on these like external factors that LPs just don't necessarily think about. You look at the deal, you underwrite the deal, there it is, and then all of a sudden these things come out of nowhere. It's like, oh man, well, at least you know for the next time. But all
Yeah,
right, Kathleen, I know we're heading towards the end of the episode, and I have to ask the question I love asking on every show. What part of passive investing do you think needs to die?
I would say the part that, it is pure risk and these alternative investments are scary. The more I've learned, I feel like kind of the traditional path of 401ks and the stock market is actually much scarier when you kind of understand how little control you have over it. So even if it feels kind of risky or scary at first, like get educated and there is so much opportunity in the world of alternative investments.
Awesome. And in terms of education, you've mentioned podcasts, deal flow, getting on the phone with sponsors. Is there anything else you recommend to get up to speed quickly that you've leveraged that other people should as well?
I think just, yeah, books, podcasts, that's been huge. And yeah, if you can get yourself in any sort of community, just to learn from other people, that is been really helpful as well.
Awesome, awesome. Kathleen, thank you so much for doing this with me. We value your support and participation on Invest Clearly. It's been great getting to know you. I'm looking forward to continuing our relationship. If people want to get in touch with you, how should they?
Yeah, I'm on LinkedIn. You can send me a message. You can find me there. It's probably the easiest way.
Awesome, awesome. Kathleen, thank you so much.
Yeah, great chatting with you, Pat.
All right, bye. Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review because that's how other people find the show. Till next time, invest clearly.